Modi government may consider allowing foreign portfolio investors to own a majority stake in Indian multi-brand retail companies. So far, this is just a draft note, but what impact will this have in case it becomes policy? Joining us on Closing Bell now, we have Kishore Biyani, the CEO of the Future Group. Mr. Biyani, good afternoon, and thank you for taking the time out. This is, of course, at this point in time, just a note that has been put out. But what is your analysis of what the benefits could be for the sector if it actually comes through?
I think when the government announced the policy 1.5 years ago on multi-brand retail going up to 51%, so we sought a clarification on what happens in case of a listed entity wherein there are other investors, that is a portfolio investors, FIIs, and we had taken our board approval for going up to 49%, and we were seeking clarification. I think we have been waiting for the clarification to come in. I believe there is some thoughts now which has been discussed in the newspapers today, that how should one view it, since the policy allows FDI in retail up to 51%, what happens in case of a listed entity.
Mr. Biyani, hi, this is Menka here. So could you clarify why do you need to go to the government to get an enhancement in your FII limit or now your FPI limit? Can't you do that via going to shareholders only?
No, we did that with our shareholders and the board approvals, but then RBI is the regulatory body and RBI wanted a clarification from the government. So we went to the government based on RBI seeking a clarification. Otherwise, it should have been on the automatic route.
Yeah, because the perception is that this should be automatic route. There doesn't seem to be any circular or anything in the FDI circular that says that portfolio investment in Indian companies that operate in the multi-brand retail business has to be less than 49%. That doesn't seem to be explicitly stated anywhere unless I've missed it.
Yes, but we did apply to Reserve Bank of India and they took a view that they would need a regulatory clearance from the ministries.
So you're seeking to go to 49% FPI? Your FPI limit, you're seeking government permission to allow it to go up to 49%?
That is FII limit. Today our FII limit is restricted to 24%. And
right.
Once it touches 24%, investors are not allowed to buy. And then you have to seek approval again to go up to 40. You have to keep on taking approvals again from Reserve Bank of India because it's marked. They don't allow more than 24%. Currently.
Yeah, so currently you have 21% and you have sought approval from your shareholders already to go up to 49%. You are awaiting RBI and government clearance for the same, right?
Absolutely, yes.
Okay, so if in fact this draft note, as the Mint has reported today, does become a final policy decision, then that would mean that automatically FII, or now it's referred to as FPI, would be able to go up to 49% in your company. You would not need any specific government or RBI permission for that.
Absolutely. Today, since the people are not so clear, I think we were not allowed to go about 24%.
Okay. There are still some hurdles to this note. I understand that the Department of Economic Affairs has called this a retrograde policy measure. What exactly is the DEA's opposition to this issue?
I wouldn't know. I have not seen any notes. I don't know. I have just read the newspaper report. But I think there has been an issue around wherever there has been some conditionalities around FDIs. So when they look at conditionalities, they view whether this conditionalities apply to even a portfolio investment. But we believe portfolio investment, nobody can buy more than 10%. No individual investor can buy more than 10%. And it's still the company is run and managed by Indian promoter. So we still, as a promoter, I think Indian shareholders are more than 51% in any case. So it is still managed and owned by Indian company as per press note 234 also.
You see this is a big limiting factor to your stock, Mr. Biyani, the fact that you've not yet been able to get RBI and government permission?
I think we have been struggling for the last virtually 2-3 years because we had always crossed the limit. We have raised some preferential allotment which is opening up a window for us currently.
Okay.
Otherwise we have always been on the threshold, on the watch list always.
So that hurts your ability to raise funds
money.
in any fund. Yeah, that's what I was getting to.
I think it's a big issue for us because if you look at e-commerce companies, everybody is operating in India. If you look at cash and carry companies, they are operating in India, dealing with normal public. So I think everybody has a backdoor entry, and why, when we are operating from the front, why should we be restricted to raise money? And today, once we are competing with e-commerce players, they are coming in large sums of money. whichever way they are coming in. But ultimately, how do we raise money to compete with people?
So if the government does go ahead and allow foreign portfolio investors to put money, not just for you, but for the entire sector, would you expect to see a lot of investments come through?
I think there is always, if there is a policy clarity on something, we will always see there are a set of investors who would love to invest in departmental store. There will be a set of investors who would love to invest in hypermarket, supermarket. There would be a set of investors who would love to invest in various kinds of businesses. So I think there are specific businesses where there is a lot of interest generation on the consumer side of business in every which way.
Mr. Biyani, you raised two interesting points that I wanted to talk to you, besides the, trying to get you to share an outlook for the business right now and consumer demand. But before that, first, your reaction to the perpetuation of the marketplace model for e-commerce players. And then I want to ask you another question on e-commerce. But the fact that the government has said that FDI and marketplace models for e-commerce players will be permitted, as you pointed out, this is a bit of policy schizophrenia, isn't it?
Well, I think in India we always had that cash and carry wholesale model. B2B is allowed, and then you can sell downstream. And I think similar things is happening on the e-commerce marketplace, wherein you're allowed B2B and you're selling to a downstream company, and you create various fund companies do get created to deal with the consumers. Ultimately, consumer it is buying and somebody is getting funded. Retail is all about back end, front end. I think we have a little bit of a convoluted structures. And I think the business models are created out of policies more than the real business model.
Yeah, but would you say that you've gotten then the short end of the stick when it comes to policy? Because, like you said, the policy is permitted single brand FDI, it's permitted marketplace models for e-commerce, which is the next big burgeoning area, but it restricts your ability to be able to go out there and raise funds.
I think regulations are always something which will upset somebody, which will benefit somebody. One has to have a work around the regulations. But
okay.
I think once you make your point, understand, things change. And secondly, I think we have always been complaining that the word multi-brand retail never exists anywhere in the world. There are the classification of retail is always done in form of convenience stores, supermarkets, hypermarkets, departmental stores, specialty stores. Nowhere in the world there is a definition called multi-brand retail, and multi-brand retail is open to a lot of interpretation and a lot of challenges. I believe the government, we have represented to the government is working on understanding what we are saying, and we expect some clarifications to come about.
You would expect clarifications on the mother policy as well, because you for the longest time it seems have been in conversations with some foreign large retail chains, but the investment is not fructified, and especially now since the government's position on FDI and multi-brand retail is different versus the UPA position. So what happens to those conversations?
I believe there would be, you see, there are specialty chains on electronic side, on the furniture side, on the departmental store side, and that's where the government should have no concern whether it's FDI, FI or any kind of money. I think the concern only lies in food retail, wherein that's the only area where I believe if there is a restriction, that should be a restriction there. And I believe this government also understands this part, because they are more concerned on the food side of business more than any other side of business.
Sir, the question I suppose I'm asking you is what time you were rumored to be in conversations with Carrefour. I'm assuming all those conversations have now collapsed because this new government has a new position.
I think the world over, the markets have changed in the last many years, and hypermarket as a business has shrunk. Sizes are changing, the store sizes are changing, but we still believe there is immense interest in a model called convenience store. There is an immense interest in...
So you're still in talks with some foreign investors in the hope that government policy will be clarified?
I think the day government announces a policy, there are many partners who can look at India.
Okay.
But I think the rules of the engagement has changed, the partners have changed.
All right. Oh, the partners have changed. That's interesting, sir. Are you talking to a different kind of partner, which is maybe more private equity and less large retail?
We are not talking to any partners, but...
Okay.
There are options which are available.
All right, I wanted to put in a question before we run out of time with you on what you made of the stratospheric valuations, companies like Flipkart are now getting. They are your competition in the future. In fact, they're already competition in some way or the other. How do you react to what's going on in the e-commerce space?
I think firstly, e-commerce, still there are only 28 to 30 million shoppers. We have more than 300 million footfalls. 30 crore loyalty program members, and 70 million unique shoppers. So I think in that sense we have a good reach. Secondly, e-commerce is again all about selling products, brands and merchandise to the customers, and that's, as a group, we have our own products and brands which sells on probably all these sites also. Thirdly, I think investors value businesses which they don't understand or put a number to it. I think they understand our numbers. We were also got this kind of heady valuations once upon a time. I think it's their time now. And
but is this prompting you to rethink your business strategy? Is the success or the so-called success and valuation for Flipkart, etc., prompting you to rethink your business strategy to a more digital online business strategy as opposed to brick and mortar?
Not at all, Menka. If you look at the evolved markets also, let's take the case of US as a market where 8 to 10% of business comes out of online, out of which 5% comes out of omni-channel. So we are a part of the omni-channel strategy which we are building up, and omni-channel is growing much faster than pure online retail today also in the world. So I believe physical is becoming digital, and digital retailers are getting into physical retail. So it is converging. So I don't think there will be a pure e-commerce model or a pure online model. Pure online are also getting into physical retail, and they need brands and products to sell, which we have as a group and a company. So I think we are going to play true to our model and adding digital to our omni-channel strategy.
So you're not seeing any imminent threat in terms of what Flipkart or Snapdeal, etc., present as competition? No imminent threat to your financials, at least at this point in time?
I think we sell our products and brands out of that side, so that's a marketplace. So we have products and brands, so and if consumers want to buy through that medium, they are willing to buy, and let them buy. It's our products and brands which are still selling.
All right. So before we go, just a quick question on your assessment of consumer demand at this point in time. We're headed into a festive season. Are things looking much better?
I think there is a lot of optimism around us. We have seen passenger car sales going up last month. But consumer demand has not been consistent. If you look at the Onam festival in Kerala, has not been probably as good as what it should be. But there is a puja demand in East which is playing very well. So it's not consistent, but there is a signs of promise for this festive season.
Could you give us a little bit more detail, sir, on as we go into Diwali, which is some of your peak selling seasons, you expect to do much better than, let's say, Diwali last year?
I think we have got into a trending of double-digit same-store sales growth. We believe we should reach high teens by October this season. So we are all optimistic. Everybody is working hard. I think fashion business has matured a lot. There has been growth all around. So we expect a lot of new launches to happen, a lot of excitement in the marketplace. We'll see a lot of advertising by the new entrants in the e-commerce space. So I think it will be good warfare in October, November, and the consumer should win.
All right, sir. We'll come back and talk to you then, October, November. Thank you very much for your time today, Mr. Biyani. And thanks for speaking to us here on Closing Bell.